Welcome to the Department of Financial Accounting. Learning Unit 1, it just talks about the introduction to company financial statements. So if you remember in Accounting 1, we purely did mostly for the sole trader. So as they were telling us the forms of companies and forms of ownership, among others, we had the company that you can have a business that is trading as a company, whereas in Accounting 1, we're doing solely for the one that is run by a one-man show. That is very important, what I've heard there in terms of that learning unit, what is expected from you. So what you're expecting from you is just to understand the background of Companies Act, and IFRS. So remember, we are dealing with Companies Act, so we're kind of beefing up our knowledge of accounting. So from learning unit 1, where we'll be starting to make marks, because remember your exam is purely about writing. So you guys will be having that. So we need to be able now to record the accounting entries that are applicable to the issue of shares. We'll get in terms of that. So you guys need to be very comfortable to do that without that. So once we grab that foundation right here, those that will be carrying on with accounting, you'll do that up until your level 2 of a board exam. Very interesting thing in that it will pop up. I've seen a number of past questions. The issue of shares, the capitalization of share issues, it's typically there. We'll cover that towards the end of this lecture or tutorial. So this is where I want to get that. So my objective and what I'm expecting from you, should you cover those 2 and 3rd bullet comfortably, so it gives me the portion now to say, if I were to look at my assignment 2, and now I'm starting to look at it, is there anything that has to do with shares? After today, you should be able to say that part of the session of the entire assignment I should be comfortably able to do. Then here we'll be knowing the types of companies. This is more of a reading. You know that you've got your PTY Ltd, the other ones that are registered on the JSE. This one, sure, it could have popped up under the assignment 1, because the first assignment was more on the multiple choice question. So multiple choice question, from where I'm sitting, I think in the past, what it tried to examine, you should have some sort of a reading done. Then you should be able to pick up there. Sure, if there was a question, then they should have listed one of other people that uses the financial statement, and should be able to list or name those people that uses the financial statement. All right, I'm moving to be on slide, that was at 4, and I'm on 5. As we're covering the accounting for companies, we need to be really able to understand where is this thing coming from. Companies are governed by the Companies Act. That is just the law part of it. Then when you move into the accounting, they are done by the International Financial Reporting Standard, we call them IFRS. So that will be the new things that will get into our system as we carry on with accounting from now on, that IFRS. And if someone were to ask, how will you describe a company? A company can be described as an association between persons that work together with an aim of making profit. So here you're just getting people coming together with the aim of making profit. How is it governed? It is a legal entity incorporated in terms of the Companies Act. What is IFRS? There it is. It's a set of international accounting standards stating how particular types of transaction and other events should be recognized, measured, reported in annual financial statement. So to those that are pursuing to be chartered accountants, if you were to join the Big Fours, what would basically happening is, maybe after your 6 months, you might be placed to go work, could be in Canada or USA. So what is nice with that, what we're doing here, people that are studying at Canada, UK, wherever they will be sending you to, you guys are on the same page, because you're doing one set of accounting standard. So the importance of the IFRS was just to make sure that you can be an accountant and be placed anywhere. Patricia, I saw your comment as well. I can attend to the comment towards later. Let me just move to slide 6. If not, this will have come where something is you need to know. It could have been in an assignment 1. I'm not sure, you could tell. But do I see that this could come in an exam? Not now, because when I look at an exam, I haven't seen last year's papers one. I think As soon as we get to that, Karisha will be able to share me with the other past exams. And then, but you guys are more on recording. Theoretical, that's a background that you need as an accountant, being able to explain this information. Let's get to the order of the day. If you remember what touched on slide 4, those 2 and 3 bullets, I think as I'm moving towards slide 6, that's where I need your undivided attention. Share transaction. What is a share? Anyone want to take a wild guess? Basically, what is a share? The capital of a company that is divided into small units is equal to shares. So when we start, say maybe we're gonna have 4 of us starting a company, maybe we've got up to 1,000 shares and we want to divide those shares. It will depend if we are equal partners or in whatever percentage we contributed towards that. Normally it takes that direction to say in a company, how many shares will I be? So basically each shareholders, from perspective of their shareholding, they will be able to share the profits of the entity in that respect. What is a share capital? Remember the things that I've highlighted in red. Those are the things that when I'm dealing with a share capital, my information now needs to fit to say, now I need to start to be making marks. I'm working towards an exam. I'm starting to get into exam technique as well as I move forward. Share capital, if I'm looking as part of the equity in my financial positions to those that are ahead. Don't struggle, Patricia. I can see you've been off sick. You're not struggling. I think we started at the right time. Unit 3, fair enough. You're not very far. Just work on the plan or on how you want to be covering accounting, because you guys will need to be studying almost every single day as much as possible. If you were to allocate 5 to 6 days of studying accounting, depends in terms of how many hours. I understand others are working, especially those are working. Studying consistently, it's very important. That is what will break. And I know now that with so many changes, majority of you are having so many exams. I mean, so many courses that you are doing. We'll touch later that in terms of once we've got our open discussion to see how we're tackling other issues. But try to push as much as you possibly can. The share capital is the capital contributed by shareholders of the company. We've covered that. It's also known as that thing. So when we're dealing with accounting 1, you will contributing money. It was also called the capital contribution by the owner. Accounting of it, it's not slightly different from the one that we did in accounting 1, but here we're dealing with from a company's perspective. Are the transaction I'm most likely to see in an exam? The answer is almost yes, because this is like 1 or 2 mark that I should be, not unless I will, but it's one of the mark that should be there for free. So you need to start now. We start counting. This is our first mark in an exam. So we've got 99 marks to tackle, because if I were to require it in one of the questions, which is most likely going to come, where they say prepare the financial statement. So that could take in either form. So if they're going towards the direction of preparing the financial position, I know share capital is something that I'm going to get. Why will I have the financial statements that does not have that portion? But not unless they direct you to which section they want. Should they ask for statement of changes in equity? We'll cover those topics. So here what I'm trying to say is this is how I start marking myself to say I'm banking. So these are the marks that I collect towards my exam. And normally sometimes if you prepare financial statement, it will depend where the additional information is taking you to. But some of the marks are given in the question where if there's nothing much that's affecting my share capital, I'm sorted. I've got nothing much to worry. I'm getting 1 mark. It depends with the question to say where is it leading me to other study units, particularly from that aspect of the question. For instance, if we're to take learning unit 7, that one would be concentrating on financial statements. For instance, on the, let's look at here, learning unit 5. Maybe they are more interested in the part that deals with asset, but they want the whole financial statement. Because remember, we are doing accounting for companies. So if additional information and the question is talking about financial statements, but the importance of the question is on assets. So this is one of where you're gonna get the marks for shares for free, because you need to have the equity here. When you look at additional information, you might not have anything to do with learning unit 1 except just to take your 1 mark and run away, because the entire question is focusing where on asset. In preparing maybe that part of the asset, maybe have a complete set of financial statement, but majority of the marks will be allocated towards the financial the assets instead of the other unit. So let's look into how we score those marks. The share capital that the company does issue is normally we'll call it issued share capital. So I've got that one in green. Reason being, you need to note once I get into an exam, I'm reading a transaction or any other question, issued share capital, what does this mean? So I need to be able to understand that this is where we at with this tutorial letter to say, what are we trying to achieve? What are these issued? So let's look at that third bullet under the share capital. The maximum number of shares and the classes of shares that a company is authorized to issue is equal to authorized share capital. So I need you to make distinction between authorized share capital and the issued share capital. So when you look at the last one, so as I'm saying, if we've got that, remember you're gonna have the likes of the memorandum of incorporation that will tell you how many shares you will have. So those that are authorized, so meaning if you've got authorized share capital, you are playing around these shares, and then they'll give the link into your issued share capital. So once I'm having authorized share capital, I'm saying this is the maximum number of shares that I could be, but you also be dealing with the issues to say, where am I issued share capital? How much did I issue of them? So you can issue as much, but you might not exceed the number that you are authorized to issue. So let's kind of grapple with those terms, but once we start getting into question, you'll see how it works. There are no questions on the slide 6. I would like to move to next slide. Still carrying on with the sheet. Remember that one, I keep bringing up the recording of accounting entries to the issue of shares. Let's look at an example. For instance, Mateco Ltd. Mateco is one of my enterprises. It issues 1,000 ordinary shares at R1.80 per share. Everyone's still in. How are we going to record this? Journal entries. Welcome back. We are doing accounting now. Does journal mean entry? Sounds familiar? It should sound familiar throughout. An accounting student, when they want the journal entries, you know you're looking at your debits and credits. How do you deal with the issue of these 1,000 ordinary shares being issued at R1.80? Anyone on the quick box? How do I start to record that? Anyone quickly type? If your hand is quick, raise it up and just indicate to us what we have done with this. Anyone who can assist on how we're going to record that? Let's check how we'll calculate. In accounting, once you given numbers, your life should be interesting. I hope everyone is having a financial calculator. I'm not sure which one you guys are using. I've always been using Cash, or some are using Sharp. I don't know which one also are recommended currently. And last time I was a student, must have been some years ago. There are two ways you guys need to do. All that we had to do while we were quiet, please let's not be quiet as we pick up momentum with the other learning units. We will really have the issues. In the past, what I used to do, I like to have the spare pages where I do my calculations. But what is important, can you see there, I've made C1, but I need to be able to take this C1 into my journal entries to show the marker to say, where did I do the calculation? If you guys were to check the chart box, what Naker did there, it did the calculation on the face of the journal entry. It will depend with time and all that. Ideally, I wouldn't like that recommendation of that calculation, because with an accountant, we're trying to be as neat as possible, because those numbers could be too much. Imagine if you are on the face of the financial position. Your presentation will cover the issue of the presentation, I think, on Learning Unit 3. I like it to be as clean as possible. So as you're writing, rather have it on a separate place where you're gonna take that number of shares you've got, you multiply that by the per share value, you get 1,800. That's that. With debit, the bank, you see they have got a financial position. We credit the share capital. So we're starting now to get into accounting. Once I start seeing the debits and credit, I just get much more excited. What I did there, I didn't put the values. So where you see C1 under the share capital, that basically tells me about the initial measurement of that. How will I measure it? I take the number of shares, I multiply by the value. Then I'll take that 1.8 where I've got that cycle there under the share capital. Then the other money, where it will go, because there will be money coming into the business, it increases my asset. How do I increase my asset? It increases by the debit entry. So next week, as we talk, this is the language we'll be talking. What increases, what decreases under each element of financial statements. Once you get that, Patricia, your life will be sorted for life. You'll be moving with speed. Once I cover that, how do we deal with these debits and credit? Because they all link to each other. So next week, tutorial will be at GM. And once you've got that, it almost will get you close to an exam. You should be almost 48% ready, because every transaction that they throw to you, you should be able to handle it with Learning Unit 2, especially how you account for it. And about your exam is going to be about accounting. Then where they learn, so his exam is on Learning Unit 2, linked with Learning Unit number 3. Because Learning Unit number 3, it's looking at the, what did we have, the presentation of annual financial statements. Can you see your life is just between Learning Unit 2 and 3? That's an exam. But now, the more meat gets when you carry further down with, mostly I think you guys will be covering the asset, but you need to be so comfortable that it's not funny the way you play with debits and credit. So there won't be anything that will be a stumbling block. So where will I be coming in is to try to, just to clean up that little bit of a thing that give you that little bit of discomfort. It could be the concept and all that. That's where I'm coming in to handle that with that. But please note that we've got, I think what I've got there, that you've got the authorized share capital is not equal to your issued share capital. That's what we need to take into account, because remember on the previous slide we said the maximum, so we're issuing based on what we are having currently in terms of the law. That would be the memorandum of incorporation. So anyone please post before I move from slide 7. It's very important to pick up that. I'm not sure if you guys could clearly see what I've got there, where I've highlighted in yellow. It's all right. We'll get, once we get into the proper accounting, I also said you'll realize the classification, they've got the initial recognition and all those things. We'll get in terms of that next week when we cover it. But I wanted to, at this point in time, this is my almost 2 to 3 marks if it goes very generous in an exam, that you need to note. That can you see now we've got almost how the 2 marks come into it. We had 1 mark just for the share capital, I think under slide 5 or 6, where if I were to do something, that example that I did, but you are given the issue of the share cap, where you just need to display it nicely under the financial statement. Here, you'll get a transaction if there's an additional information that to say, hang on, maybe during the year they decided to issue X amount number of shares, you'll take that to multiply by the rate. But how you record it, so sometimes if you want financial statement, this journal entry will be part of your working. So your working day needs to be very clear to follow each additional information. It needs to be accounted like this. So if I were to do financial statements and I'm dealing with maybe additional information number 1, under my reading sheet or calculation sheet, I'll be debiting bank and crediting my share capital with that statement that they will telling me what is happening about the issue of shares. I keep that in mind as my calculation, whereas if I were to move this into my financial statements under the equity, I'll be taking that 1.8, showing it as part of my share cap. Is everyone clear? All right. I like to move right along. We're still on the shares. Type of shares, ordinary shares. So that's the way that you might need to get familiar with. The ordinary shares represent the equity ownership in a company and give you the full voting rights at an AGM as well as dividends. We'll cover that. I didn't put any coloring under the ordinary shares. I didn't want to overwhelm you at this point in time, but just to kind of get that comfort to say where we're heading. Then we're gonna have the preference shares. It's our second type of shares. The preference shares are the instruments that have the debt, fixed dividends, and equity, the capital appreciation characteristics. If we are moving towards the IFRS there, it might be maybe not at 1502 where we're dealing with learning unit 8. So that issue will also revisit again where we're dealing with financial instruments. Preference shares tends to play a very interesting role in terms of how these things work. So preference shareholders are paid a fixed rate of dividends before the dividends are paid to the ordinary shareholders. So these are like your VIP if you were to compare this with ordinary shares. So they'll always be entitled to that fixed portion of the dividends, determined dividend rate, before any other profits are shared with the ordinary shareholder. Okay, and I'm moving towards slide 9, types of preference shares. Now I'm starting for exam technique and all those things. I need to know. Once I'm reading an additional information, it says, hang on, there's a cumulative preference shares. So your mind needs to be able to say, okay, I'm dealing with these preference shares. But if I'm going back to slide 8, what I know is my background, if you're looking at the preference shares, I know what it could have. It could have the debt, the fixed dividend, as well as an equity appreciation portion. It will have this rate. But now what they do now in slide 9, they further expand to say, hang on. As you read, you might pick up that you could be dealing with cumulative preference shares. There's a certain way that you need to be able to handle this monster if it pops up there. Basically, this one, it says the cumulative preference shareholders retains his or her right to the dividends from year to year, even if no dividends are declared. So here you'll be in a situation where even if you decide not to, a company does not have enough reserve to be able to pay your profits, to pay the dividends, as a cumulative preference shareholder, you are entitled to those dividends. So there will be that some sort of an accrual that takes place there. The fixed preferential dividend accumulates. So if they don't pay out, that is fine, but they will owe you. The company will still need to owe you whenever the reserves becomes available. The cumulative pref dividends instead should be disclosed. That will get interesting. The accounting tends to be, those are the easy marks to say. You might have the dividends not paid in that bullet number 2. But now once I do into accounting, can you see now I'm moving towards unit 3. We're talking about annual financial statement disclosure. So the issue on the cumulative preference dividends, which were not declared or paid, they will need to be disclosed because of the special nature of theirs. They are cumulative by nature. So you need to tell the users of the financial statements, how are you dealing with this type of preference shares? So that's another thing just to note there to say there could be that disclosure issue. So once you move towards accounting 3, you'll be able to do with more disclosure. I think it's more on disclosure. Those are like those kind of silent marks that are there that either you knew it or you didn't know it. So it's not like you're doing any calculation when you get into disclosure, among other things, when you deal with that type of share. Then you're gonna have now the second one type of the preference shares, redeemable. I also highlighted redeemable. So in an exam, you start highlighting redeemable. So your mind now needs to shift. So if you did not have the cumulative one, assuming you've got redeemable preference shares, how am I dealing with redeemable preference shares? Is it a preference shares that provides for redemption on a specific date? Redeem meaning that redemption a specific date. This one or at an option of the holder meets the definition of the financial liability if the issuer has an obligation to transfer financial assets to the holder of the share. That sounds like too much English. Yes, it is. I want just to introduce it here. I don't want to do much about it at this level. By the time we move to Unit 8, we'll be talking another fancy accounting language, financial instruments. So these issues of the financial liabilities, financial assets, it gets covered in that. If you had to look at one of my slides, I think it's slide 2. It's covered by IFRS 7, it's IFRS 9. You've got IS 32 that deals with the calculation of all those things. I think towards your third and fourth level, this becomes the key thing. So if any one of you wants to be the banker or so, this should be your favorite topic. Financial instruments. If you become a chartered accountant, specializing or working at the bank, you'll be eating from the palm of financial instruments. So that's why we're building up that understanding later towards that. Let's not just get too confused. We might revisit these two once we start putting more things in terms of that. Financial Unit 8 will be unpacking what I'm covering in slide 9 of Learning Unit 1. This one, slide 10, capitalization of shares. I did not go much more in detail to your assignment, but I would be surprised if I open it and I don't see cap shares there. Is it in an exam? It's most likely because it's more of, remember what I said in slide where I deal with the recording. So the cap issuing of shares and the issue of cap shares should be one of the topical issues when you get of that. So a capitalization issue is also referred to as a bonus issue. See what they're trying to do here is that the shares are issued in the same proportion as the existing shareholding and are merely the book entry. So there's nothing much here that is happening other than the book entry. So this normally will happen where you get a company that is having so much reserves and now they want to convert that into the share. So basically it says the number of shares that that are there because it's an issue. Remember, once you've got issue, you've got these things that you're working towards your authorized share cap to hit the limit there. So the number of shares will definitely increase, but the total value of the share portfolio will remain the same. So we're doing some mix match. So it's more of a maths literacy now. So in issuing these shares, the issuer will convert the reserves into the share capital because you had so much of this. So you're trying to change that into the share. Another thing, very important, journal entries rather when there is a cap share issue. So you see we've got the first journal entries that we did with the last example where we're issuing the shares. So you bear that in mind. So now we're moving to another part of the journal entries under Learning Unit 1 that you possibly have will be under the capitalization of share. So if you look at the bullet 4, because you're just saying in the issuing of these shares, you're basically converting the reserves. So you are using the reserve because remember the reserves, you'll see that next week when I cover Unit 2 to say the equity will increase on the credit side. But in this case now you are using up these reserves. So how do I decrease that? It will take the debit entry. Can you see what I've got there? You'll debit the retained earnings. So reserves are equal to the retained earnings is part of the reserves you guys will be dealing with at this level. You see that. But now what am I doing? Go back to the very first bullet under these things, capitalization issue. So now I'm issuing more shares. But how do I issue shares? What is the accounting impact in that? I'm increasing my equity. Can you see that slide number 3? The number of shares held will increase. So I'm trying to credit. Can you see that how I'm linking my slide and my bullets with this journal entry? I had a number of shares under bullet 3. It's going up. How do I increase my equity? With the credit entry. Can you see there? You credit the share capital. So everyone is happy and everyone is scoring the marks at this level. There's no confusion. Leave alone the figures. The figures will take care of themselves, but this part of the slide is critically important to get what am I doing here. And there's a cap issue. All that I'm trying to say, I'm trying just to increase my share capital. How do I increase my equity? By a credit entry. But remember, this is a specialized animal. I need to have sufficient profit to provide for this cap issue. Therefore, meaning I must decrease my profit. When I decrease my profit, normally they will take a debit entry. So once you understand accounting from that perspective and simplifying it in that form, then you are hitting it at the correct platform. Slide 10, I would say it's one of those important ones. If I'm sharing my slides or not, I'm not sure at this point in time if I'll be sharing that. Those with a phone or screenshot, it's one that you could screenshot. Go to slide 11. If there's no question, we might play with an example just to see when there are figures how it normally works. Before we move that, the capitalization shares may be issued using utilize. So that's a principle. So fair to get in terms of that, how you check yourself, because it's a pity now that we're not face to face, but I'll try to emulate as much stuff as if we were to face in terms of the question, how it will guide me. So among other things, this one will definitely not be playing at SAA because they don't have money there. So you wouldn't expect them to have the cap issue, for instance. So yeah, it means that you'll be getting at the company that is sitting with very good reserves, and then they will be proposing that. So sometimes you need to be able how to have your eyes move around the given information in a question, especially once you get with an additional information, the background kind of technical knowledge that you should have per question or each scenario that will be. So here there will be a company that is very in a healthy position, but now they're having so much money that they don't know what to do with it. They try to have this cap issue. And how you do that, that's that journal entry on the fifth bullet. Let's go to the next slide. By the way of an example, so that slide 10 was more of giving the background on how you'll account that on a technicality theory. So let's get that. The following balances were taken from the books of COVID-19 Ltd by December 31, 2020. They had the issued ordinary share capital of R1 shares equal to 150. Let's remember in accounting we're saying is ordinary share cap will no longer have the par value. So if you do with that in a question, you're sitting and you're seeing things like that, you need to be able to quickly calculate from here to say, hang on, how many shares were issued here? So can you see, you'll take that R1, divide, you have that 150,000 divide by R1 to get number of shares that are issued. Let's get that one so that once you see things like this in exams, another exam technique, you need to understand what it means. This company, can you see, they are sitting at 160,000 Rand of reserves there in their retained earnings. So this, when you refer to retained earnings or this, these are your profits that you've been accumulating maybe in the past number of years. If it's a first year of trading, that should be at that point in time. So you've got enough reserve in year 2, you're kicking year 2 with 160,000. So it depends. So this normal, if this company has been existing for quite a number of years, it will be the profit over the years. So that what retained, let's get that emphasis, is retained profits in a nutshell. So we'll call it in accounting retained earnings. So these are your retained, meaning it's what you've been keeping over the past few years. So let's get into other accounting jargon like that there as well. I don't know, in my mind I always keep changing because in South Africa on the 1st it's a holiday and even JSE is not trading. I keep changing the dates to the 2nd. You'll see majority of your example will start with the 1st, but practically it says to me when there's a public holiday it's very few people that are working. So I've changed the 1st to the 2nd. I know it's a working day if it's not. Even if it's a Sunday, some companies works on Sunday. It's not a holiday. On the 2nd of January, 2021, the directors decided to make, I've decided to highlight. In your exam, what you do, Ideally, guys, if you don't have highlighters, try to get that. You'll see how your life will be easy to be able to highlight things. Maybe also have a red pen to make a capitalization issue. I've made that in bold. Where it does, you are my VIP people, you are in this class. You're not confused when you see capitalization issue at this point in time. In your mind, it should take you back to the 12th of June to say what was happening under slide 10. I know what is expected of me under slide 10 when I'm C cap issue. Let me quickly go back to that. So this must haunt you when you are in an exam on assignment. So this slide must pop up to say this is what is going to basically happen. So when you get into the question, you need to have this knowledge from slide 10 to be able to solve the slide 11. Okay, so this information will be the same. In your assignment, it will be equivalent to this. In your exam, it will be equivalent to this. So on. In your board exam, it will come like that, slide 11 linked with that. All that will change will be the name of the company, could be the financial year end you're dealing with. What else will be there? The numbers obviously will be different. But other than that, how it roles or function is basically gonna be on slide 10. So what they did, they issue at 1 rand. So you've got 1 rand of that. Check this arithmetic that we're dealing of. 1 share for every 3 shares. That was the reason that why they would recommend that accounting student, at least they have some sort of a mathematical ability to deal with some English there. So this could be your maths, those people that did maths at school, could be the other maths, I don't know what they call it, the other one. But where you saying, remember how many shares do we have? We had 150 shares. We calculated that when we touched the issue of that. So what am I saying now? That every shareholder that has 1 share for every 3. So you're looking at you'll be getting 1 share for every 3 shares that were previously issued to you. Get that? So we're moving from the number of shares. So we need to be able to do that. And then after that comma, it says with the minimum effect on distributable reserves. Minimum effect on distributable reserves. But you know, I cannot have this share cap if I didn't have that 160,000 in terms of that. So the journal entries will definitely basically be the one that were on slide 10. I always start with calculation to see if I understood my English correctly. So the cap issue is of 1. So there is that 1 for every 3 that I had. I've highlighted that 1 over 3 under my C1 calculation. The number of shares in issue, we've done that calculation initially. Can you see if I read, I need to know where to write things down. But now for the cap issue, now I need to multiply because the impact is that for everyone that I'm behaving is that for every 3 shares that I previously had. So I usually will divide that by the total number of shares issued. So in terms of calculating what is the cap issue, it will be 50,000 shares to be issued. So it's 1 for every 3. So it's 1 divided by 3. So that's what it means, 1 for every 3. If we just revisit a little bit of arithmetics there. But what do I multiply with? I will multiply it with number of shares. Can you see what in an exam you won't be told, but you are expected to do? As I was reading initially, I said once I'm given information like this as I read, the sense that I need to make here is that I'm not being told how many shares are in issue, but because of that rand value of 1 rand per share, it tells me that it is 150 shares. But what if that 1 rand was 2 rand? Quick one on the quick box. How many shares will I be having? Someone please type that quickly on the chat box. If issued ordinary share cap, it's 2 rand per shares, and I've got 150. Please indicate how many shares were issued then at 2 rand. Thank you. The class is very awake. So can you see these are the things that makes an exam interesting. Some things are not being told. Thank you so much. The correct number in 75. Thank you, everyone. Thank you, everyone. See, we follow. Let's go back. So once you've got this information, where I want you to guys function at, you need to be function at anything possible that needs to be done there to say, what is this information all about? Thank you, thank you, thank you. Can you see this? You just don't read things and not do anything about it. No, it doesn't work like that. As I touch each line item I'm reading, I need to make sense of that. Do you guys follow that? The retained earnings, we've touched base on how to deal with that. All right, I think we are here. Thanks for that. That 75,000 would have been correct if it was at 2 rand. Can you see my journal entry does not change? How do I account it? Remember, the key word there is that for the directors, the cap issue, that cap issue, because it's in bold, you need to know if there's a capitalization issue, what does that mean? It goes to that credit share capital, because from the theory, if you call it theory from slide 10, it says I'm just issuing shares to increase the number of my share cap there. That is how I'll increase it. How do I increase my share cap? By credit entry. There's that credit share capital. But because slide 10, it says this thing only happens when I've got enough retained earnings. Which entry it will take? It will go to retained earnings. So for exam purpose, you are already covered now. So you've got about, it should be 2 or 3 marks if I'm not mistaken, because it's that C1, it's my calculation. It's a pity I need to show. I should have shown that C1 needs to be shown either under that credit after the statement of changes in equity. Let's deal with that thing. It's a pity I did not write on that one. So C1 needs to be cross-referenced to that credit share capital account SOEI. After that, I must put C1 to show where that 50,000 is coming from. That is very important. And then I debit the retained earnings. So the question in an exam, it will say, from here, go please prepare the statement of changes in equity. So this is how you will be handling that thing. How do I disclose that? It will depend, because it will be in the current new financial year. Can you see that is a balance as in 31st 2020? So I might be heading to 2021 financial year end, assuming my year end is 31st December 2021. So the first transaction on the 2nd of January is on the 2021. So on the debits and credit will be taken care of under the adjustment for our share capital and retained earnings will need to be impacted. So I'll have a minus 50,000, meaning I'm reducing that 160 that I kicked on with what? With 50,000. But when I get to my share capital column, I will be increasing it by 50,000. If the journal entries were required in an exam, maybe they say when they are quiet, you need to be careful. Another exam technique. It depends how fast you write. If they're not saying with narrative, but I've always written that, except when they were specific, because another institution I attended, they'll say, when they are quiet, you need to also give the narrative what you're doing, meaning that is the capitalization of issue of shares. That is something that I've get underneath, but they will guide you if it's needed. So it could come in a form of a journal entry. It could come from when they say prepare the statement of changes in equity, not even financial position, maybe equity, because the share cap is affecting that set of book. Okay, so that's an exam technique. So we've got how many marks today? Quick one on the chat box. How many marks we've got under the shares? Calculate that for me quickly. I've been indicating the number of marks. Someone who's marking or taking the notes, please indicate how many marks are we having so far. We're almost done. 3, no, we're short. 3 is incorrect. 5, I will say close to 5. You're correct, because here I will be getting 3. 6, we're pushing it. 5 and 4 are the closest. Let's get to slide 10. Can you see that debit retained earnings and credit share cap? It's 1-1, so it will be 2. We have got red and green. Please note that when there's a cap issue, I said this will be once you do that. Let's move again. 4 marks. This was another 2. Remember, that's one where there was an issue of ordinary shares. So this could come as maybe additional information A. Somewhere, if I was setting the exam as a lecture, I will decide further down, maybe a month before year end, I issue a cap issue. So this will have been the part that takes place. There's another 2 marks here. So it makes it 4. So we're still on those 2 record. Remember what I said with the share capitalization, where if you are required to prepare the annual financial statement, maybe financial position in this case, but the question was focusing on asset, but among other things, you were given the issued share cap. That would be 1 mark for GM just to show it under the equity. So we scored about 5 marks under this, which will always be there in an exam. So we need to know where the marks comes. That's when I start. If you are not given for free, there will be free marks. I used to call them the marks for Germans, those free ones. These are the giveaways. There are giveaways in an exam. So is that 1 mark? Here, because you're doing a little bit of work, because you're taking 1,000, you're multiplying it by 1.8. So you're working for it. There's that calculation there. I should be able to score 2 marks there. Team, thank you so much.
Thank you for your time and cheers.